Yesterday, Tesla's deliveries in the second quarter were better than expected, which helped the company's stock go up this morning. In just 5 days, shares have gone up over 20%. We've made a huge amount of progress with Optimus, going from someone pretending to be a robot dancing in a suit to a pretty bad robot to a robot that is actually doing useful work in the factory today. Oh, and Tesla is obviously a lot more than a car company. For example, we do a lot of software engineering at Tesla. In fact, a huge chunk of the engineering we do is software engineering. This is a big deal because car companies aren't usually software companies, so things like our auto software for energy storage are very important. All of the software that runs the cars that superpacks the power walls of the solar For AI and fully self-driving, you've been thinking about Tesla correctly if you've only been thinking about the cars it makes. But it's time to look at Tesla in a bigger picture. In this section, we'll look at Tesla's huge potential. Other than just cars, Keith Fitzgerald, a market trend expert, shares insights that might change the way you think about Tesla. According to Fitzgerald, we're just scratching the surface of what Tesla can do. He expects the company to grow a lot over the next few years, with its value doubling or even tripling. This growth will come from not only their famous self-driving cars, but also from full self-driving technology and energy solutions, areas that Tesla hasn't really explored yet. But before we get into the details, don't forget to like this video and subscribe to Tesla. That being said, let's look into it some more. Looking at Tesla as just a car company is seen as a monumental mistake by 95% of experts who have previously underrated the company. Fitzgerald talks about Tesla's transformative potential in areas like AI and robotics, suggesting that it might be one of the most undervalued AI stocks on the market right now. This sentiment is echoed when comparing Tesla's current market price to its future potential. Now, don't click or buy anything. Just pay attention as we play a clip of Fitzgerald expressing his bullish view on Tesla, indicating that the stock value could rise to $300 next year. Keith, I should also mention that you're still bullish on Tesla. This could be a $300 stock next year. Yes, I am. I think this stock is going to double or triple, maybe even more in the next few years. Again, anyone thinking about this only in terms of cars is very smart, but I would encourage them to broaden their horizons a lot more. This is about power and robotics. It's only a 20% rise from where it is now, but Musk knows what he's doing. What's important is his bigger vision. It's not just a 20% rise. It's about the huge untapped potential that could see the stock double or triple in the near future. Why is this important? Because it changes the story of how Tesla went from making regular cars to being a star in AI, and robotics innovations could make Tesla the best AI investment right now, whether you like him or not. Tesla is becoming a powerhouse thanks to Elon Musk's strategic direction. This isn't just about cars, it's about power and tech innovation as a whole, robotics, and taking advantage of one of the market's most underrated areas. Stay tuned as we look into why Tesla could be the dark horse in the AI race and change not only transportation, but also how we use technology every day. Tesla's stock has gone up an amazing 45% in just 30 days, which could make any investor nervous. However, as the saying goes, when in doubt, zoom out, and over the past year, Tesla's stock is still down by 6%. Basically, we're back to where we were a year ago. What's really happened is a market correction that got rid of the questions and pessimism that were clouding Tesla's outlook. Now let's talk about the specifics. Many people in the market were skeptical about Tesla's delivery numbers and said the company would go into a downturn because of a problem with demand. However, the delivery numbers told a different story. They surpassed predictions and put an end to the bad story. Also, the excitement for Robotaxi Day on August 8 is sure to clear up even more clouds of doubt, which will only add to the positivity. It's important that Elon Musk's accepted pay deal gives him 25% control of Tesla. This isn't just about the money. It's also about securing Musk's commitment to Tesla so he can lead innovative AI projects without being distracted by outside ventures. The recent price increase was largely due to this approval, which came after related court cases were resolved and supported Musk's long-term vision for Tesla moving forward. While Tesla has been criticized for lowering auto prices, which some saw as a sign of falling demand, The reality is that this strategy is likely to help the company gain market share in volume sales and play smart in the very competitive auto market. As we get ready for Robo-Taxi Day, stay tuned. Tesla's journey is far from over, and the potential for growth in AI and robotics is still huge. Don't miss out on these developments, stay informed, and think about how Tesla's strategies might affect not only the auto industry, but also technology landscapes around the world, especially since high interest rates are affecting consumer spending and automakers are struggling to get vehicles off their lots. Unlike Ford and GM, Tesla has stood out for the smart way it sets its prices. Tesla was able to lower prices because it had the best margins in the industry. This has helped keep sales high and made Tesla a star in both market strategy and business efficiency. Doubters may say that Elon Musk isn't as involved with Tesla, or that his decisions have gone off track. But Musk's choices in the last few months show that he is still very much in tune with the needs of the company and the way the market works for long-term Tesla shareholders. The outlook is still good, but traders should be careful around August 8th, which is said to be a big day for the unveiling of Tesla's Robotaxi. If the event doesn't deliver something amazing, the stock might experience a sell-off, which is a classic case of buy the rumor, sell the news. So be smart about your investments and be careful around this date. Many experts use a long-term investment strategy that involves dollar-cost averaging instead of trying to time the market, because they believe that the fastest way to lose money is to try to get rich quick by market timing. I have 20% of my portfolio in Tesla because I think the company will do very well. Looking at the bigger picture, the markets for robotics, full self-driving cars, and energy are expected to grow much faster than Tesla's current market cap, possibly adding another $3 trillion by the end of the decade. These areas, especially FSD and robotics, are untapped markets with huge potential for change. While it's hard to say exactly how big the change will be, Nvidia has shown how profitable it can be to enter new tech sectors, with revenues and share prices skyrocketing. Companies like Penner and Tesla that are on a similar path have not yet seen this level of growth, but they should as they use a discounted cash flow model, a key tool in investment analysis, to open up these new markets. It is possible to guess how a company might do financially by guessing how much cash it will make in the future. The use of a DCF model, especially on the specially made platform stock, according to MVP, annual revenue will grow by about 40 to 50% over the next 5 years. This growth will not happen steadily, but in a parabolic surge. This pattern is similar to Nvidia's growth trajectory, which started with slow gains and then sped up sharply as new technologies and market changes took hold. Tesla's explosive growth is due to strategic advances in 3 key areas: robotics, full self-driving capabilities, and energy solutions. Each of these areas not only adds a lot to Tesla's business model, but it also taps into bigger markets that are growing quickly. Robotics and AI innovations are about to change many industries, from manufacturing to service, and improvements in FSD technology are about to change the way things are done. In the same way that Tesla's transportation investments are in battery technology and renewable energy solutions, so are its energy investments. These all fit with the global trend toward using clean energy sources. The DCF analysis, which takes into account the expected average cost of capital of about 10% to account for risk and the value of money over time, shows that Tesla's stock is currently about 100% less than what it's worth. The current market price is lower than the expected cash flows, which are discounted back to their present value. This suggests a realistic current price target of around $490 to $500 per share. Looking further ahead, setting a 5-year price target for Tesla at $1,400 shows confidence in the substantial growth and profitability of its robotics, FSD, and energy sectors. We set this goal because we think that these segments will not only grow faster, but they will also start to make up a bigger part of Tesla's total market cap. These predictions are based on the belief that technology will continue to improve and that the market will want more integrated tech solutions, which Tesla is uniquely positioned to provide. In essence, the financial modeling points to a time when Tesla will make a lot of money from its smart growth and new products in areas that will see a lot of growth in the years to come. The accuracy of these financial predictions is improved by using advanced analytical tools on platforms like Stock MVP. This gives investors a solid base for making decisions. It's clear that Tesla is on the verge of a new era in technology and innovation. With smart investments in AI and robots, and in addition to navigating the present, Tesla is actively shaping the future of transportation and energy. As we conclude today's discussion on Tesla's financial outlook, it's clear that with the expected rapid growth in robotics, fully autonomous driving technology, and the energy sector, Tesla is set to change not only the automotive industry, but also how we think about technology and sustainability. Revenue is expected to grow by 40 to 50% each year for the next 5 years, which points to a time of great change. What do you think about these predictions? Do you think Tesla will reach these goals, or do you have a different idea about its future? Thanks for reading this study. If you want to stay up to date on Tesla's journey and get more stock insights, don't forget to hit the like button and subscribe to Tesla Market. Your support helps us bring you more content like this. Join our group to stay up to date on the latest Tesla news and price moves. Thanks for watching, and we'll see you in the next movie.